Okay, so this is 2021. Nothing too difficult really in it. The usual things to check. The name of the company is Robinson, grand. The net profit for the year is 104,000 and it comes after the interest. Now that's the order we want it in. So if you had net profit before interest, you'd have to get net profit after, but we don't now. We have that 104,000. Share price at the moment is, I don't know. Might be something we're asked to work out. Your dividend rate 4%. Your preference dividend. Sorry, your debenture rate is 4%. Your preference share is 6%. So 6% of 200,000 is 12,000. We'll be working off that. And if we go down and check at the bottom, it's shareholders, whether they be satisfied. So it's fairly straightforward. Remember to put in the share price into the shareholders one and the value of one share, and that we want to keep some sort of a focus on our liquidity and our liquidity in particular on our ability to pay dividends. So we're going to talk about dividends quite a bit in our report. Alright, so we're asked to do for 2019, just check that you're not forward projecting at any stage, which I don't think you are. Okay, so you're asked the opening stock if the rate of stock turnover is 8. So cost of sales over average stock is 8. Cost of sales in the question is 536. So 536 over average stock is 8. So therefore 536 is 8 times average stock. Just divide them in. Average stock 536 over 8, which is 67,000. Now average stock is opening stock plus closing stock over 2. So closing stock is 75,000. So if that's 75,000, well this is 8. That's 8,000 more than the average stock, which means the opening stock is going to have to be 8,000 less than 67. So it should be 59 when I'm all done. So opening stock plus closing stock over 2 is equal to average stock. So 67,000. So if we cross multiply, opening stock plus closing stock will be 2 times 167, which is 134. If the closing stock is 75,000, well then the opening stock is 134 minus 75, which is 59, which again is what we'd expect it to be, or it has to be. If 75 is 8 above 67, well 59 is 8 below 67. Now you can't write that in an exam because it doesn't. Be hard to write that down, but it's perfectly correct. Number 2 then, interest cover. So net profit plus interest over interest. So 104 is the net profit, 16 is the interest. So 120 over 16 is 7.5 times. Third one, return on shareholders' funds. So return on shareholders' funds, net profit minus preference dividend over shareholders' funds. And shareholders' funds are ordinary share capital plus profit and loss balance. So they're ones that aren't debt basically. So 104 minus the 12, 6% of 200,000 is 12 as we know, over the 582, and that gives you 15.81. Now this next one, the market price if the price earnings ratio is 6. This hasn't been seen since 2012, that question, which is one you should all really look at. So it's based on this year. It says the market price if the price earnings ratio is 6. So they give us the price earnings ratio and they're asking us to find the price of a share. So the answer to the price earnings ratio is 6. And so share price over EPS is 6. Now we can work out the EPS, that's just a formula. So EPS is net profit minus preference dividend over issued shares. So net profit is 104, preference dividend 12, so that's 92, over issued shares 460. So 92 over 460 is 20 cent. Okay, so that's our earnings per share. So share price x over 20 is equal to x over 20 cent is equal to 6. So therefore share price is 6 multiplied by the earnings per share. So 6 by 20 cent is 120 cent, or €1.20. Okay, so work out your just the trick to these is write down the formula and work out, well, what element am I trying to find out? The share price. You have the answer. You can go and work out the EPS, and then it should all make sense from there. Last one, the div yield, is dividends per share over share price. So ordinary dividend over issued ordinary shares. The ordinary dividend is the total dividend, 48, minus the 12, and the total ordinary shares, 460, so 7.83. So therefore your dividend yield will be 7.83 over 120 by 100. That's obviously the answer is by 100 to turn it into a percent, 6.53. Okay, so there are ratios. Straightforward enough, maybe, apart from number 4. Okay, so the report, shareholders. So keep a focus on dividends. And this is a strange question. You'll see. Well, it's not strange, but and obviously you have to give an opinion at the end as to whether they'd be satisfied or otherwise. Now, there's very little movement from year to year, so it's hard to know if they'll be satisfied. My feeling is they would be satisfied at the end of this, and you'll see why. Like, a lot of the things are slightly worse this year than last year, but they're still above the norms, so it should be okay. So performance, profitability, and dividends policy. Make sure to give the heading performance. So, called Sully, called Robinson. Robinson is a profitable company with a net profit after interest of 104,000. I might need to change that to Robinson. Return on capital employed, net profit plus interest over capital employed. So 120 over 1182 is 10.15, and that's up from 9.8. So that's a positive trend. Well above the risk-free rate of return. And also well above the cost of borrowings. So the debentures is 4%. So that's efficient use of resources. Now, in the marketing scheme, which I'm looking at here in the background, it did say that it's above the debenture rate and the preference share rate, which I'd never seen before. So maybe that could be something you put into your answers. Return on shareholders' funds, which we worked out, is 15.8%. They don't give us last year, so we could just say that's well above the risk-free rate of return and very healthy. So that's all positive. The dividend policy then. So dividend per share is 8.3. That should be up. Sorry, I have them the wrong way around. Dividend per share 7.8, down from 8.3, which is the negative trend. I'll correct that as well a bit. Actually, I'll correct it now. Policy, so. And 8.33. Also change this to Robinson. Sorry about this. Because otherwise I'll say I'll change it and I won't. I'll have it wrong for years to come. So dividend yield 6.53, down from 6.72, which is a negative trend, but we say what it is. It's the interest earned from owning shares, and while it's falling, which it is, it's well above the risk-free rate of return, and it's above the debenture rate. So, you'd be happy enough. It's quite good actually, that rate. Dividend cover 2.56, and it's up from 2.2 times. 2.22 times, and that's a positive trend. Say what it is. You could say so it's adequate and it's growing with enough of the profits kept in the business to fund expansion or to cover any future loan repayments. So they might want shareholders might want it to be higher. They might be happy. It's hard, just put in something to link it to shareholders. Whatever way you're going to take. I try to be ambiguous in this because at the end of it, I'm not sure whether I'd be happy or not. I think I am happy. Overall return I should have put in as well. So it'll be about 14%, which is well above the risk-free rate of return. I keep forgetting about overall return, so please don't. State of affairs then, liquidity. So asset test 1.08, it's down from 1.1. It's a negative trend, but they're both above the ideal of 1:1, and it actually hasn't fallen by too much. It's basically the same. So it doesn't have a liquidity problem. They'll have no difficulty paying their short-term debts as they fall due, which all means, again, link it back to your dividends. They should be in a strong position to pay dividends in the future. Okay, they've good liquidity position, already paying a good deal of dividends, so why won't they be able to continue to do that? Gearing and interest cover. So gearing is 50.76. It's improved from 55.76. It's a positive trend. It is highly geared, but it's really neutrally geared now. It's just about highly geared, so they're funded more through debt than, Jesus, why do I keep getting these wrong? They're funded more through debt than equity. I'll change that. Okay, so it's slightly dependent. There's no real risk, there's only minimal risk because it's sort of neutral gearing. So you don't want to put in that there's risk when there isn't really. So you just have to tinker around with the language that you use. Interest cover is high, 7.5 times. It's up from 7 times, which is a positive trend. Explaining what it is, as always, it's the number of times interest can be paid out of profits. They're in a good position to pay their interest. High interest cover puts the company in a good position to pay higher dividends. Now, this was in the marketing scheme, that the debentures are due in 2023-24, which is very soon. So they mightn't want to pay higher dividends. They might want to keep putting money aside to pay back those debentures. So I put that in, that they can continue to put money aside to repay debentures. It's a good thing to say. Sector then, so this is within the prospect section. So they're in the home renovation and insulation sector, and that's a good sector to be in. So the short-term prospects are good. It's growing. Grants are available. Long-term, they're also good. There's demand for housing and housing upgrades as people have savings. I was thinking, how do I put in a negative on this? It's like, well, home upgrades, what other option do you have other than upgrades? You might, instead of upgrade your home, you might decide to move home rather than renovate. So that was my sort of negative. That's the only one I could come up with. So share value then. We worked out the share price to be 120. It was 124. So it's down to 120. So that's 3.2. And that does indicate a lack of confidence in the firm by the markets. But in my price earnings, they're pretty good actually. 6.7 and 6 is good. They're low, so there should be an improvement or a chance for growth in the share price. So overall, then I had to take a position. I said they would be satisfied with the performance, state of affairs, and prospects. And I just checked the marketing scheme there. In the marketing scheme, you can put in overall they will be satisfied or overall they won't be satisfied. So you can take, and you'll get the marks. You can take whatever position you want. Part C, faster stock turnover can increase the profitability of a business. So that's asking you, do you understand what stock turnover is? Stock turnover is the number of times your stock is sold in the current year. Now, if you think about that, well, how could selling more stock quicker be good for your profitability? Well, every time you sell your stock, you make profit. So if you buy your stock in for a tenner and you sell it for 15, every time you do that, you make a £5 profit. So sale of stock contains profit. That's the reality of it. Otherwise, the profit is tied up in the stock. Then I thought, well, what are the costs of holding stock? If you have a load of stock in your warehouse, there is a cost to it. So in this case here, they are in the insulation business or in the home renovations and insulation. So say they have a load of stock insulation set aside, and then better installation comes across. Well, that stock can become obsolete. Whereas if they're continually selling their stock or continually turning their stock over, well, there's less chance of the stock becoming obsolete. And the last one then, I thought, well, holding stock is expensive. If you have a load of stock, you actually have to store it somewhere. So the more you hold your stock, the more warehouse space you need. And that gave me 3 points. You only needed 2. Now I was thinking about it afterwards, going, Jesus, this isn't anywhere. Like, it's not in any notes. It's nowhere. And a lot of these 10-mark questions at the end, you just have to put a bit of thought into what the ratio actually means. So understand what the ratio means. Understand then what they're asking you, and come up with 3 or 4 things that you think best answer the question. It's nearly common sense type things. So if you're selling more stock, what is the benefit of that for profit? That's really what the question was. So hopefully that's of some use. I'm going to do maximum, I'd say 2 or 3 more of these, and that'll do you then for the year.